This week on the Retirement Quick Tips podcast, I'm recapping the stock market, bond market, and the economic climate of 2024 and looking ahead to 2025 with an eye on how does this impact your retirement investment portfolio and your retirement in general as you either approach retirement or are living in retirement already. Today, I'm doing a deeper dive on the stock market. So looking back to 2024, I touched on this already earlier in the week, but stocks rose over 23% in 2024. And that marked the second consecutive year that the stock market had 20+% growth. That's really incredible. 2 back-to-back years where the stock market was up over 20%. That hasn't happened since the late 1990s. It's not all that common. On average, the stock market, if you go back many, many decades, the average growth of the stock market, I think, is somewhere in the range of like 9 to 10% a year. So what we've experienced the last 2 years is 2 back-to-back years where growth is about double what it would typically be on average. So I think the takeaway for that is, one is evaluate your portfolio. Stocks had a great year last year. They had a great year in 2023. If you haven't rebalanced, it's a great time to consider doing that because your portfolio is probably pretty darn close to its high water mark and you want to rebalance. You want to reduce the risk when the market is at a high point. Now, will the market continue to grow? I think it will into 2025, but that doesn't mean that you wait and sort of let it ride. You want to take the opportunity to not to use a gambling analogy because investing is not gambling. But take some chips off the table when you have the opportunity to do that. And what we saw also in 2020, what was the other takeaway? Rebalance. I'll have to come back to that. It might come back to me. All right, portfolio values and markets, they topped out in November. So there was a lot of optimism following the election that Trump 2.0 is going to bring deregulation, lower taxes, a friendly business climate. And stocks reacted to that in a positive way. But we ended the year on a weak note. There's a lot of, and still is a lot of policy uncertainty. I'm not sure what's going on. Trump is talking about Canada and Greenland and the Panama Canal. I just read a Babylon Bee headline the other day that this is satire, of course, but Trump is talking about renaming the moon Space America. So anyways, there's just a lot of policy uncertainty. And I think that is starting to set in. There's some potential inflationary pressure from tariffs and changes with immigration. Those could both reignite inflation. I talked yesterday about how that was one of the key concerns. I think if you're looking ahead into 2025 and you're seeing the gains that you've had in your portfolio, as I said, I would definitely look seriously at rebalancing. I don't think that the market is going to be as strong as it was. So I wouldn't, maybe that was the other takeaway. I wouldn't expect further robust growth. Do I think that the economy will go into a recession and we'll have a decline in 2025? No. But if you just look at averages, it's very unlikely that we're going to have another year where we have 20+% growth. I'm hoping that, always every year, it's like strong single digits would be fantastic. If we get better than that, great. If not, good single digits, 7, 8, 9% would be fantastic. However, there are a lot of risks around the world. So you have Europe that is in just kind of a malaise. The Middle East obviously is in a lot of turmoil. Asia, China isn't doing as well. You have a lot of demographic challenges with aging populations across the world. And the US is moving in that direction as well with the demographic issues and lower birth rates that will probably come home to roost. But that's a problem for tomorrow. But my point is that the risks and the geopolitical risks around the world, I would say advocate for a stronger tilt towards investing in US stocks and having less in international. So I would take a peek at your portfolio. Look at your allocation, look at your diversification. How much do you have concentrated in the largest tech companies that now make up the majority of the returns in the S&P 500 for the last couple of years? How much do you have in international? How much do you have in small cap and mid cap? I think those areas, small cap, mid cap, are likely to do well in the year ahead. Lower interest rates, a friendly regulatory environment certainly benefits small companies in a big way because they don't have the resources that the ultra large multinationals have. So they're going to benefit more from a friendlier business climate. And as always, the perennial dividend growth stocks, I would make that a bedrock of your portfolio if you are getting close to retirement. And I've talked about that at length on the podcast. Of course, individual preferences and risk tolerances are there, but I think it's an essential component to most portfolios. It should be, and it is certainly the foundation of many of our own clients' portfolios. All right, so tomorrow I'm going to talk about bonds and fixed income markets and money markets and cash and all that in more detail. Again, recapping last year and then looking ahead into the new year. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.